I think the big challenge in China has been, who's going to invest out there, because Western funds, long-only funds or endowments in the US and Europe are very hesitant to invest out there. We always believed, even at that time, that the key trigger for China would be China domestic capital flowing in out there. And you should think about that, technically speaking, if you look at the retail investor out there, earlier they used to invest in housing, which was their biggest asset. They don't find that interesting any longer. They should invest in trust products, which aren't that interesting any longer. So when you're getting 2% in a bank, you should be putting money into equities at these valuations, but the confidence hasn't been there to do that. So you need to have some trigger that's going to change consumer confidence, and that expectation for us hasn't happened as yet, but I expect that ultimately will be the trigger for the market, for a sustained return in the market out there.
So what would you be interested in China right now? It's had a torrid time since 2021, some sort of recovery right now. Some say perhaps the worst may be over. What might you be looking at?
So, the US-China tensions that we're talking about, that's only going to go in one direction. I don't think that's going to improve. So as I mentioned at a panel just now, that look, we like companies that have access to large domestic markets and are relatively self-sufficient in terms of supply chain technology within one political bloc or economic ecosystem. So if I look at that in the context of China, there are a lot of consumer businesses, consumer brands in China. You've got large cosmetic brands in China that are now bigger than L'Oreal in China. You've got beverage companies, whether it's Luckin Coffee or it's Nongfu, etc., that are bigger than Starbucks or any international competitor out there. You've got sports goods companies, you've got gaming, you've got consumer durables. Now, all these are very China-focused businesses, and I don't think going to be impacted by what happens geopolitically elsewhere. So those continue to be opportunities, and we think the strong brands there are going to be strong cash producing, so that's important. Some other interesting areas, I've always talked about biotech being interesting, and you have a lot of new drug development taking place. The challenge right now has been people concerned about some of them operating in global markets and what will happen. But you're now seeing multinationals willing to buy the original drugs, the rights for those for global use. The amount of out-licensing that's happened from China has gone up threefold to $35 billion in 2023 from about $11 billion in 2020. So you are seeing people appreciating that technology, and you can actually sell it overseas. So there are segments which continue to be attractive, but as I said, the key source of capital ultimately which prices that appropriately will have to be domestic capital, and for that we need a revival of domestic consumer confidence, which is still lagging and it's lagging because real estate prices are down, and that's their biggest asset, and because jobs are not available. So those are issues. So we do need the government to stimulate the economy and find some solution to real estate to revive that confidence out there.